Okay, I think I'm live. Let's check. All the buttons seem to be the right color. Everything seems to be right. Let's take this letters off of my face. All right, thanks so much again for joining us for today's market recap. Today I am Greg Lewis coming at you once again from my basement. Yesterday we had a little bit of a internet mishap and I had to pack it all up and go to the office, and now I've got my phone going off. First rule of broadcast, turn off your phone. Hey, so yesterday I had to go in the office, pack up all my stuff, and then I had to pack it all back up and bring it all home today because now my internet's working, and hopefully everything's going well. I see we've got Mai coming in. Thank you for saying hi, Mai. Hi, Mai. Hey, as you're coming in, make sure you say hello. We've got quite a few people here already. I'd love to hear who you are, where you're from. That'd be great. Today's guest is Gary Burton. Gary's from Australia, and he's a great speaker, and I know you're going to enjoy his input about this week's market, which I haven't had a chance to really look at the markets, but I think they've been taking a little bit of a dive today, if I'm not mistaken. We'll find out in a minute. So how is everybody doing with all this? I know this is still very strange with all this quarantine and pandemic. Just when you think it's over, it sort of comes back. Here in our local government, we thought it was kind of ending, and now we're seeing a resurgence of numbers, so it's kind of back on, and we're still at home. And how are you guys doing? I hope you're all doing well. A question I asked yesterday, give me a response. Are you up or down right now in your portfolio? Up or down? When you log on, just say hello and let me know if you're up or down. So we're going to be starting here in about 3 minutes and 58 seconds. Also, please let me know if you can hear me. I'm going to put my headset back on to make sure I'm broadcasting audio. I think I am. So we are MetaStock. MetaStock sponsors this event every week. This is being broadcast solely on YouTube, and we'd like to ask if you have any questions for Gary or Hunter, who is hosting, to go ahead and ask him in the chat. Hello, Daryl from Sydney. Thank you for saying hello. And Hunter will be monitoring chat very closely, so if you have any questions as time and pausing permits, we'll certainly answer those questions. They also often ask for symbol requests, securities you want to see, so go ahead and be ready with those. In fact, you might even want to go start loading those now. What was I going to tell you? We got 2 minutes left. I was going to show you one thing. Let's cut that in here. All right. If you go to our homepage, let me see if I can do this. If you go to our homepage, you'll see this banner up here, and this banner goes to the APAC Summit, which, if I can click it, is this place. So what you can do here is go ahead and register for our upcoming APAC Summit. The speakers have yet to be announced, but go ahead and register now so you can get a reminder, and you won't have to worry about that later on, right? All right, let's cut back. All right, so we have about 1 minute and 25. I see that Gary and Hunter seem to be here, so I'm going to go ahead and let you listen to a little music and mute myself until we get started. Thank you so much for joining us today.
Hunter Smith. Welcome to today's market roundup. Today is July 24th. Good afternoon, good morning, wherever you're at. It is the 24th, but it feels like April 255th as we keep on rolling with the old quarantine. We have a special guest today with the market roundup. Before we get too far into it, let's get into the legal stuff. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of our software, any trading strategies, or any information provided in connection with the company. You would really think that I would have that memorized by now, but it's Friday. I'm on my second round of coffee, so you guys get to go easy on me. Today, joining us is Mr. Gary Burton. Done several market recaps with us. An amazing trader. He's the author of our Haguro method that's actually in MetaStock. Gary, how are you doing early this morning, your time?
Very good. Thank you, Hunter.
Good.
I'm well.
Now, kind of an interesting market right now. Just pull up two of the main indices here in the U.S. S&P down 20 points today. Dow down 180 points today. We've had a recent relative rally, as you guys can see here, but it seems like we're going to start hovering around this kind of support level. What do you think, Gary?
Yeah, it does. Markets are very much at an inflection point now where they really need to start to push higher very, very quickly. So, and there's a lot of chat about, saying that this is the lower top, but the bears are looking for the lower top. This is it coming into the market. But when you look at the way that this market trades, the S&P down 20 points today, the Dow down a couple hundred points, and yesterday as well. It's not. I refer to it as is it a committed sell? Committed sell you would see the markets close on their lows and be down. For example, the S&P be down 100 points and the Dow would be down 800 points. Would be a committed sell, and we're not seeing that in the indexes at the moment. Even in the Asian area, we're not seeing that type of movement in the indexes. So very much consolidation around the news at the moment. So the issue, of course, with the news is how far lockdowns continue to go. In Australia, for example, one of our states has fallen back into full lockdown now. In the US, I understand they're dealing with it state by state, and the market's looking at this going, okay, well, where's our economic growth going to come from? And it's showing up in the indices at the moment as this indecision period. So a little bit of risk off from time to time, but if you're looking at the precious metals markets, for example, you'd think that the world was coming to an end, but the indices don't actually tell you that.
Yeah, it's very interesting. The indices are, I feel like they're just kind of testing the waters. I agree with you. I don't think it's a large sell-off. A couple of lines I've put here. We had this kind of consolidation.
Yep.
The 13th, 14th, 15th, right around that area. We had a couple of dojis, the little hammer in the middle on the S&P. We did the same thing pretty much here with the Dow. And our range is pretty much right within that area. I think if it was a committed sell-off, we'd be much closer down to this low.
Yes.
Let me actually turn the charts over.
Just while you've got the S&P there, yesterday being an outside day at the high, that's always a bit of a key that there's a little bit of a top coming in. When you get an outside range like that with a higher high and a lower low than the previous session. So that's the point of market confusion on a daily basis, and today may have been that follow through. Now, we didn't see the markets close on their lows today, so that may be that follow through has now been completed.
Yeah, and let's see, let's do this. I'll just change the charts over to you. Should ask you to share your screen. Yeah, it's kind of interesting where I think there's so much fluctuation going on right now. There's so much indecision. You know, we have still been on an uptrend. This most recent high has actually, you know, surpassed the last, you know, high that we had on June 1st, June 2nd area. So I don't know. It feels like we're still in an uptrend.
Yeah, it does, and that's, you know, this is just part of really what's going on, is that the markets are trying to factor in, well, what's important here. And economic, if you look at, as everyone's discussed to the nth degree, is if you look at the economic numbers, the market shouldn't be anywhere near where they are. So now it's Federal Reserve intervention on a global basis, so the markets are skewed, possibly. But I always think the markets are forward-looking, and at the moment, they're not factoring in any great economic collapse in the next 12 months to 2 years at this point. So you can see my screen there, Hunter?
Yeah, we can see it just fine.
Okay, so we've got the Australian our index, XJO 200, very similar consolidation periods to most markets at the moment. We haven't performed anywhere near as well as the US indices, for example, pushing into the highs, but our market now, a very nice pennant shape turned up in the last 2 months, and significantly with the 3 lows in place. We had a breakout. I wrote in one of my notes last week that be aware that this initial breakout might be the bull trap, and we've seen that in the last few days, where it's simply come back and tested this pattern. So we're very much caught in the same inflection point as the rest of the markets around the world, where they're trying to evaluate the immediate in the next week or two, where we're going around this pandemic issue. What I don't like about the Australian market at the moment is that we're simply working lower volumes down through here. So in Australia, they've allowed now the people to withdraw their part of their retirement savings, and we're seeing a little bit of a sell down in the market to cash up as people draw on their savings. We're seeing this market really consolidate now. So I don't think there's anything actually wrong with this index at the moment, other than an unwillingness to follow through for a day, which is incredibly frustrating for the short-term traders in here. But we're still seeing fairly good support on the top end of the index, if you like. So that's our index. When we look at where the let me bring this across current gold chart, and gold, as everyone is aware, is in a primary uptrend. This is a weekly chart of gold. This week has put in a significant move over the $1,900 level to close just on the $1,900 level so far this morning. I'm not sure where this, there's a lot of momentum in this really around the price itself, rather than, and when I say that, I mean people are suggesting, well, gold is a hedge against inflation or potential inflation, or gold is a hedge against the markets falling over. Gold is everything, but I suspect that this is more just a momentum play more than anything else, because there's certainly been better returns in some individual stocks in the S&P 500. When you look at the relative strength on gold at the moment, we're sitting a little bit over 70. It was really the price was working itself higher, but the relative strength was working itself lower, and seems to have cleared that this week. We had an initial relative strength sell signal, swing sell signal back here when gold went through this outside range and followed through for a bar. But at the moment, you can see the Bollinger Bands on there. We're working through the 20 period simple moving average inside the Bollinger Band. We're using that as support, and this week has landed outside of the Bollinger Band. So I would expect to see some form of consolidation in the price of gold in the coming coming week, at least, based on a simple Haguro method, which is inside MetaStock. As you pointed out, we would use the middle of the range, use this $1,850 point, 1,855, middle of the range of this week as initial support, and as a gauge of whether this price is going to hold up or simply reverse. Keeping in mind that when you get these types of, if there is a reversal in here, all those on short-term profits will be the first to leave, and then if there's anything more significant, you'll have those on longer-term holders willing to protect their profits. So it'll be an interesting week in gold, I think, next week. And the same with the silver chart. We're seeing, let me bring this out. It's a silver futures contract. Let me see if I can get my marked up chart out here.
Yeah, we always talk about, pardon me, we always talk about silver being kind of a little bit lagging to gold, but even being almost a little bit of a better investment at a lot of times.
Yeah. Yeah, silver, I at great risk to my personal safety, I always maintain that silver is a, sorry, that's copper. We'll go with copper at the moment. I always maintain that silver is an industrial metal, and you will see if you overlaid the price of silver against the price of copper, for example, I've got the copper chart up here. If you overlaid the price of silver over copper, you'll see they pretty much match each other for pretty much the last 12 months. So as copper, this chart of copper here is inferring that we've got an industrial an economic recovery or expectations of an economic recovery underway, with copper coming out of this $2 level or $2.10 level back into these highs around $3. And this is the highs from way back Q3 2018, which was the support level prior to that. Now, so copper remains at a really interesting point at this really interesting level. We've seen a bit of initial rejection out of these levels. We'll see the same type of thing in silver as well. Silver is an industrial metal more than anything else. This area here is where the World Health Organization said that there would be a possible pandemic, and we saw copper sell off on that. So since then it has recovered. This bar today is simply a rejection of these highs. We're not seeing any follow through on this week, and in fact this week's it remains an inside week. So relative strength on copper is sitting up around the 70 mark. This is not a bad thing, and simply indicates that we've got quite good momentum. So we've seen the large range, the impulsive move 3 weeks ago, and pushing into these highs where there'd be a natural bit of profit taking in here. But I would like to think that this is actually going to consolidate just here and then move a little higher, potentially into the next resistance level of $3.20 a pound. Now, LME copper stocks are declining, their inventories are declining, COMEX remains fairly stable, their copper stocks remain stable. So this is a simple buying exercise by the consumer industries, and we're seeing copper held up really quite well. Let me bring out the one I meant to bring out. And the silver chart is pretty similar with this recent large impulsive move up through here. We're seeing silver. The relative strength on silver is now way up here at 91. And I wouldn't be surprised if we did see a little bit more profit taking in this. Now, this is a daily chart of silver. This move here has been exponential. A lot of traders will argue that, well, the gold-silver ratio was predicting this, maybe so. But it is essentially an exponential move out through here and consolidating last night and Thursday. So a bit of a retest of somewhere in the lower areas. If we saw weakness come into this, I'd be drawing a line across this sort of level here. Worst case scenario, you'd see a retest of the actual breakout level around this $20 mark on there. So it's got up there very, very quickly, and in conjunction with the price of gold's had a run. I think this is just simply a trader momentum move more than anything else to bring it up this high. However, it is in a primary uptrend, and you would sort of treat it, you wouldn't be too keen on a big short on this particular metal, I don't think, at this stage, but as it remains in a primary uptrend.
Yeah, and looking at that, I think that last point you make is very, very important, because a lot of times people are looking to short based off of these massive moves, considering that the momentum is just, it's too much, it's falsely inflated. And that is understandable, but, like you said, it is in a primary upward trend, and has been since March, since that pivot in March. So again, if you're a trader out there that believes in trading with the trend, remember that the overall trend here is bullish when it comes to silver and copper, if memory serves, as well.
Yes, that's right. Yeah, that's right. The underlying trend is that both of them are in primary uptrends. If we switch this over to a weekly, we would see that there's put in a series of significant higher highs and higher lows, which sets up your primary trend. But in the short term, we are sitting in this overbought area around this 91. This I would point out to traders that use or looking at the relative strength. Relative strength is one of my favorite indicators, and there's a lot of there's a standard commentary that relative strength over 70 says it's overbought. Well, if you use that thinking on this particular metal just here, you would have suggested that silver was overbought back here at $17.50 and really not participated in this movement here. So I take the opposite view. I look for divergence in these types of indicators. There's one here. May, June, silver had a divergence which really stopped this upward movement at the time, went into a consolidation period, and then simply broke out as momentum increased. So RSI over 70 is not necessarily overbought. There's particularly some stocks that are running at the moment. Relative strength has been over 70 for literally months, and now in the short term, the relative strength on silver is sitting up here at 90. This is a fairly high level. We can see in the past that once it gets into higher levels, there's a little bit of consolidation. Wouldn't be surprised to see that here, but there's no divergence at this point. And as this consolidates, if silver does consolidate through this $22 to $23 range, this will simply move lower as a natural effect of that and set itself up again. But this simply indicates strong momentum at this stage. The outside of that, I'll also bring in for this part of the world, we have gold in Australian dollars here, which hasn't performed anywhere near what the US dollar gold price has. We can see here recently US dollar gold when it was at 1845. We've had a very strong rising dollar here in Australia. It's now sitting over 70 cents consistently most of this week, and it puts a cap on the actual local gold price because you have a number of gold producers here, small and large. Saracen now is one of the larger gold producers here in Australia that have taken over the Kalgoorlie, or 50% of the Kalgoorlie pit, super pit in there in Western Australia. And so we saw Australian dollar gold break from this little consolidation here. Relative strength, there's really nothing to see in the relative strength other than it's moving higher, but we saw it break out here as US dollar gold moved higher and the Australian dollar cooled off a little bit from its made a fairly strong run early in the week and has cooled off towards the end of the week. But we're not seeing it take out these highs way back here in March, April, back here. So we're not seeing the Australian gold producers really outperform at all. We saw one of the bigger producers, Northern Star, was actually down 6% in Friday's trading yesterday, last night, and the other producers are down 2 and 3% on the day. So there's very much a cognizant of this particular chart, saying that we're really not pushing out the new highs for the local producers there at all. The other, when we get into that, one of the things that always interests me is the volatility index, and here we have our local XVI, very similar to the VIX in the US, which is essentially doing the same thing, remaining relatively high. Ours are sitting here at around the 20 mark. This is in response to the pandemic really not going away after looking at potential second wave of this pandemic and what it might do to the economy. So we're seeing this still raised volatility in the markets, and I think it's great for the options traders at the moment. Options prices are extremely good, but it also brings in a little bit of a ceiling into some equities or into the equities market when you get this type of raised volatility levels. So it's as the US started printing money, there was some flattening of the curve of COVID-19. We saw it fall, really decline in value here. Then we're looking at a global reopening, was talked about in June, and it fell. And then we have this potential second wave come in, and we're starting to see it rise again. So, I think this is the cloud over the markets at the moment, is where all of this is going.
Yeah, it's a pardon me, it's a good point, and I know that at least here in the U.S., the lack of plans, the lack of direction that everyone has definitely taken its toll. Are children going back to school? Are jobs reopening? Are we getting more stimulus, et cetera, et cetera?
Yeah.
Everything's incredibly up in the air. There is no direction, and there is no timeline for direction. So
yeah,
I think volatility is going to be relatively high.
Yeah, my daughter lives in Chicago, and she made the comment that if the scientists don't find a cure soon, the parents will, just to get the kids back to school.
Right. That's completely believable. On a side note, if anyone has any questions here on those of you watching YouTube, if you have any symbols you want us to look at, if you have any questions, feel free to type them in the chat box. This is live, so shoot away.
Yeah, I've got Bitcoin out here. It's I don't look at Bitcoin that much, but it is an interesting consolidation period in here, and it is interesting that Bitcoin is starting to move with the metals as well, underlying metals and currencies. So this may be the breakout that they're looking for in Bitcoin. I noticed that John Bollinger was a little skeptical of this, suggesting that this consolidation here may lead to a step lower. But of course, the market does what the market does, and we've broken out a little higher here. So we're looking at this $10,000 ceiling again as the significant resistance level coming in on Bitcoin.
Yeah, Bitcoin's Bitcoin's been an interesting one for quite a while now. It's something where I was one of the individuals that jumped on the wagon, et cetera, because there was so much volatility in it.
Yeah.
I think that a lot of people were looking at Bitcoin as an easy way to make money, and I was actually even curious if more people would return to trading Bitcoin, when the market really started crashing, but
Yeah.
they didn't.
The issue, of course, with Bitcoin is when you look at the volatility of price movement, Bitcoin has the highest volatility at the moment. When you look at the daily ranges, you can put on an ATR indicator and look at the daily range, average daily range over 2 days or 3 days, and you'll find it's in the hundreds of dollars. And a simple equation of dividing that back into its own price gives you a number, and you'll find that if you did the same with the euro dollar or the Australian dollar or even the metals at the moment, you'll find that Bitcoin, the internal volatility encourage anybody that has an interest in their analysis to make notes and this is what and I'm using, as you know, the Zenith side of MetaStock, but in the MetaStock side, this side, it's I really encourage traders to keep their notes on their charts, save their charts with their notes and their lines and things, and it gives them perspective going forward about, well, I thought this at the time and it was proven to be right or wrong. That type of thing, and it's and you'll find that also the technical aspects of the market or the language of the market, if you like, your outside bars or your dark cloud covers, that type of thing, and you'll see them repetitively play out over time. And when you mark them up, it keeps drawing you back to, well, look at that played out, and here's another one today. Maybe I should exercise a bit more caution here.
I need to do a lot better on that. I was doing it for a while and then it just stopped. Looks like so YouTube, I know the video is back. I don't know if they can hear us okay.
Hunter, you're all good to go now. We lost you for about 45 seconds. A little issue here in the control room. My apologies to you and Gary. I don't think you talked about anything that was critical that they didn't hear, but for about 45 seconds, it was a blank screen and no audio. So apologize for that.
Well, that's right. That's how you make $2 million in 15 minutes. That's what we were talking about.
Right. Really sucks you guys missed out on it. So, Gary, okay. It's been a great session.
Gary Burton, that's the funniest thing I've ever heard.
All right, Gary. So we're back and good.
So
we're looking at the VIX chart.
Now, yeah, I mentioned we had our VIX, our XVI. This is the VIX, the main game. We can see here that it really hasn't come back. It really VIX back into the 10 to 15 point range back here is ideal, but we're still seeing the VIX a little bit elevated at this point. So this is the weekly chart on the right hand side, daily chart on the left hand side. But we're seeing this remain elevated here, so a little cautious around the markets on that.
Yeah, it's been relatively, looks like it's been relatively flat for quite some time. What are we looking out of from the VIX as far as a breakout is concerned?
Well, clearly now we've got this level here, this around about the 24 point level. Let me draw a line on there. Now we use the closing prices on this, so we're seeing this hold up here. There's a gap in the chart back here. We're sitting above that gap now. A break with a small range week this week. The VIX itself made a small range week, so there's really no interest in this sort of moving lower at this stage, and we're seeing the relative strength move below 50. So it has lost its upward momentum clearly, but at this point with a small range week, really nothing to see there. So in the daily chart as well, on a day-to-day basis, we've got clearly got this movement down. That's sitting below the 20-period average on the Bollinger, sitting on the lower bottom of the Bollinger Band, quite capable of walking down there. And I'd be drawing this line across your chart. So look, if we got a weekly close below here, then and we'd see it reflected in the equities anyway. We'd see equities relax a little and trade a little higher on this, and we may see the overall S&P resolve itself into a new short-term high, but this VIX really does need to move lower to do that.
Okay. Once again, if you guys have stocks, throw them in the chat that you want us to take a look at. Stop being shy, those of you out in the audience. Just throw the stocks in there. See what you guys want to look at.
This one, this LRCX came up in my work this week as a potential top coming in here. We can see that this, one of the things I really like to notice on charts, particularly on the weekly charts, is this. If we grab a line here and just draw, we can see that there's been a move. The recent high back here in February, we've seen this high tested and essentially rejected at this stage, and you wouldn't be surprised to see more rejection coming out of this, because it's been up here, the highs up here at 367, and currently closing back in below this $350 mark and back into 345. So wouldn't be surprised to see that we might look back and see this as a rejection bar, and this really come in and test this little window here around the 320 mark. Now volumes at the moment aren't inspiring, and we're noticing that in a lot of stocks around in the US and in the Asian area, the volumes aren't that inspiring. Shows a lack of participation in pushing these prices higher. But we may look back at this and say, look, there's the equal high, and see some form of rejection in there, because and it's only a reflection in the indexes anyway, but everything's had a great run at the moment. We're coming into earnings seasons now. Some of those earnings look a little mixed with the outcomes. Australia will also come into its earnings season in the next few weeks, or reporting season, and the market will wait in anticipation of that. We saw business conditions remain relatively strong. PMIs still hovering up a little bit over 50 at this stage. The market, I think, will wait for the outcome of those, that final outcome of this reporting, to see where we're going, to see what the commentary is around the markets. One of the more interesting comments I heard regarding the markets, or when news comes out regarding the markets, and it was from one of your US guys. He said, well, if you take a look at what the current news is it better or worse than the previous news? And often, if it's a little better than the previous news, no matter how bad the previous news was, if it's a little better, then the market may get marked up on that anticipation of it continuing that way. However, if the current news is a little worse than the previous news, then the market obviously gets marked down. And I thought it was an interesting observation in the short term when the market makes simple comparisons like that.
Yeah, it's very interesting. Basically states that we have the memory of a goldfish, which I agree. I'm not gonna lie,
Yeah.
I kind of agree.
Yeah.
Any better news is great news. You know,
Yeah.
and vice versa. We're 2 news releases away from the world ending, so who knows?
Yeah. So given, yes.
Oh, go ahead. Go ahead.
I was going to say, given Gilead's position in all of this, you would think the stock would be doing a little better than it is, and this is why it's a little dangerous to blindly follow sectors in here. Gilead's put in an outside range this week. It has been, this is the weekly chart on the right hand side, another outside range here. Now these outside bars, the statistical evidence of an outside bar marking a high or a low is staggering. And they take time to resolve, because they were the period where the buyers had control of the market in one stage, and then the sellers had control of the market, and vice versa. So these outside ranges are significant markers in charts, and you'll often find them at major turning points. As we discussed earlier, there's one in the S&P at the moment. Yesterday's daily bar was an outside range, and they do take time to resolve. So it wouldn't be surprised if we saw even Gilead here move a little lower in the face of all of this medical vaccine news around. You must really trade the chart as you see it here. So very strong range this week coming out of there.
We do have a couple of requests trickling in.
Yep.
So the first one is CBA.AX, so Commonwealth Bank of Australia, I believe.
Okay, so in my view of the Australian banking sector, inside the Australian sector, the banks are literally the index. They make up a significant majority of the index themselves, and behind that we have a few of the mineral companies, BHP and Rio, in there as well, and the local company Wesfarmers Retail. But I take the view, and it was a very hard lesson I learned back in 2009 when I was working at the desk at the time, and the chap across the road from me, across the desk from me, said that, watch the banks lead us out of this, and it was certainly true. And we're seeing the banks up against all of the headwinds that they have as far as potential loan defaults, mortgage defaults, the same in the US. And I think the areas really to come out yet is the short-term loan potential defaults of car loans and credit cards, that type of thing, as we see employment. If employment numbers start to rise again, I think that will be the headwind for the finance companies and the banks. So we're seeing here Commonwealth Bank, for example, a weekly chart here. We've come out of, I strongly suspect this is the low in place now, because we've had a very strong impulsive move out of there. A chance to sell here came in, and we've now moved across the 20-week average. Not inspiring. These weeks here aren't inspiring. They're a simple rejection, out of there. This last bar, number one, if you look up the Haguro method inside MetaStock, you'll see it's the number one bar, which basically says that we may see a bit more consolidation around this level. Relative strength on a weekly basis is above 50, but again, we're seeing these low volumes, this declining volume, this participation volume in the stock. So the weekly chart, really, we've got a potential fake out the last 2 weeks over this high back here, and potential move lower in the short term, or consolidation at least. So based around our Haguro method, we would simply be drawing a support. This is the last large range bar on the chart. You simply draw that as your support in there. But these last 3 weeks remain a little bit unconvincing about moving higher in the short term. And we're seeing here, this is one of the more frustrating days we had in our market, in our local market this week, was this day here. Very strong day on the index, very strong day in the financials. Undid a lot of hurt for the short-term traders this particular day, and over Wednesday, Thursday, Friday, we've basically handed it all back. It's been the bull trap in the market at this part of the world. Again, I like this being above the 20-day moving average on with using the Bollingers here. Bollinger Bands aren't telling us a lot, starting to squeeze in a little, but really not telling us a lot. And the relative strength is not telling us a lot either. It remains between the 50 and the 70 area. So there's really nothing to see there other than, I think, a bit of further consolidation.
Okay. Next symbol, pardon me. Next symbol is actually a Forex pair, the pound versus US dollar, GBP equals.
Okay. Hasn't updated the weekly there. Let's get that up. There we go. Okay. So this is currencies really, we've seen a very, very strong move in the Australian dollar recently, and the euro has made some significant gains. And we've seen the US dollar index now really testing this 95 area. A lot of traders are suggesting it's going lower out of there, but there's fairly strong support above the 94 level on the US dollar index, and however, the US dollar index has weakened. We've seen other currencies move out of there. This is interesting because it has moved across the middle average here. It's put in the higher low here. One of the tenets around John Bollinger's work, for those that are interested in using his bands, is where you get a closing price outside of the band followed by a closing price inside the band. So we've had one here, this closing price here outside of the band, previous one as well, but a higher close here, still outside the band. Then the close, the swing point inside the band here is often precursor to a significant trend change. And we saw that back in here, there was closes outside of the band. The pound rallied, put in the higher low here. The pivot point bar sets that in place. This is the pivot point bar here that sets that low in place. And here we are 2 weeks later, pushing into new highs. So it's interesting that the daily chart here has found support on the 20-day average, and it is now moving into the upper band area. In the relative strength, there's really nothing to see in the relative strength in here. Don't read too much into that, but it is a good sign that the weekly relative strength is over the 50 mark, it is one of the bottom lines for me, is to have the relative strength on a weekly basis over 50 before any long position is entered into. It is just one of my straight out simple rules. And this can take weeks to unfold, of course, but it certainly stacks probability on your side when you see this swing back above the 50. So it looks reasonably positive, you would say, with both the weekly trend pushing higher and the daily trend pushing higher together. This is what you're looking for position trading or longer term trading, is when the two time frames start to work together. So this is a very, very good sign in here. This is where the sellers had to go down here back in June. There's the engulfing bar at the base, and we've seen it rally out of there. This hammer bar here basically said the sellers have run out here. We've seen the consolidation after that, and now the push higher again. So a good look, I think, in the pound, and a good look in a lot of currencies around the places at the moment as well.
Okay, wonderful. Let's see, we have time for one or two more. First one, Kura.o, so Kura.o.
Yeah, so yeah, consolidation chart, really, isn't it? This is these types of consolidation here. When you look in the background here, and I must admit this is one I don't follow. First look at this chart, but here we are with if you look at the relative volatility of the stock based on Bollinger's method, you can see here it's really been outside the lower band on the way down, and then suddenly something changes. So we've got a pivot bar here. This sets the low in place. Certainly not a reason to believe anything's going to change at this point. But then you get these very strong impulsive movements, and then in this case across the 20 average. But we start to take out these previous highs. These previous spike highs here, we start to take those out in our closing price, and that really tells you that the buyers have control of this here. So the weekly chart here, very strong week here, and we're simply getting consolidation. I would just from a charting perspective, I'd be drawing these just a pennant line. Oops, yep, come on, a pennant line around there. That type of thing, just to encapsulate the price action, so you can be alerted that when something changes. Keep in mind that these types of pennants generally work their way in about 2/3, the theoretical apex point of these outside lines. It'll work itself into about 2/3 of that range before we start to see any sign of a breakout in a technically perfect pattern. If you look closely at this, and this is one of the things that I think is incredibly significant when you start to look at pattern work, is we had a low here back in mid-June. We had another spike low here. This spike low has the higher low either side, a bar with the higher low either side. We had another one here. If we get another one here, we've got the higher low than the previous spike low here. If this develops into a bar next week that doesn't break this low, and we end up with these three lows in there. Now, if anybody reads any of Linda Rashke's work or any significant pattern work text, these three patterns of threes are very, very significant inside these three lows, three highs, three lows, two highs type of thing. And we can see here we've got a high up here and another high here. So technically a really nice pattern developing on here. Very strong move in the background, pennant shape here, and the expectation would be that this would actually break higher. When we look in the daily chart in the recent price action here, and you notice that I don't have 2 years of data on here because it's often irrelevant in the short term, because most people are looking at where's this going today, where's this going next week. So we'll keep it in context of where we are in the most recent price action. The low here is $16.61. The low on this day is $16.61.5. So essentially a minor double bottom here. We've closed into the high this morning or last night. Sorry, your afternoon session closed into the high here. And the closing price, intimately, the closing price here is $17.10. The high of this bar is $17.08. So we've closed over the high of that bar. And it sounds like I'm splitting hairs, but believe me, it's when you get into your price action and start to look at the closing price against previous bars of significance, and this is a bar of significance because it has made a spike low here. We had a bar that created the pivot here, and now the second bar that has simply closed over that high point in there. So I think it looks like it really wants to hold these levels at this point. Not a great look sitting on the bottom Bollinger Band at this point, but I'd be a little encouraged in the longer term by the weekly chart of this potential price move. Clearly, if it fell out of the bottom here, I'm wrong. Market's going lower. And you would act appropriately, but it's really setting itself up, I think, for another leg higher here.
Yeah, and one of the concerns that I had, I've actually traded this chart a little bit, but one of the concerns that I had is, going back to, let's see, April, since there was a very large move in the end of April on this stock. And yeah, so essentially there, what I was kind of looking at is it's been trending up. It's had higher highs. It's had higher lows primarily. And we were just getting to, if right over the 13th, I think it's, let me look at my charts here. It's probably the 8th, right around the 8th. That was kind of the top, but it was, we have a lower high, which kind of typically can signify either your consolidation or the beginning of a downward trend. That was concerning for me when I saw that, essentially.
Yeah, absolutely. I mean, it comes down to how you view your risk. There's no, and everyone should act appropriately out of that. In the longer term picture, and this is where we could talk for 2 hours on this, Hunter, around position sizing and risk in markets. But at this point, if you're a long-term holder, I can't see any great need to sell at this point. If you're a short-term player, I'd be looking for this bar on today to actually follow through at least into 1 bar higher. And if it crosses over the center average, well, that's 1 step and so on. And then we look for a completed pivot point in the weekly chart, which we won't know until next Friday.
Exactly. All right. No more requests in the chat. Gary, I'll put the spotlight on you again, though. We need a pick for next week. Something you feel strongly about for next week.
Oh, gee. Yeah. Let me be diplomatic about this. It's hard. I'm finding it at the level I work at. I'm finding it difficult to put the pinpoint on any particular stocks. I think there is a potential that the afterpay type stocks, the credit card type stocks, may have put in their highs at this stage. You'll see copper stocks, one of them here in Australia, Oz Minerals, and a few of the other copper stocks. You'll see those, I think, perform because the price of copper looks like it wants to sustain itself up around these $3 a pound level. Individual stocks at the moment, it's going to be news driven around virus vaccines. If you're looking at the medical sector, everything else seems to have fallen by the wayside. The stocks of the online retailers, Amazons and eBays and that type of thing, always interesting to watch where those go. eBay was one of my picks some months ago when it comes up. was some months ago when we've seen eBay cool off, but this price run out here is essentially, if you did some price targeting, you would find that this is really the area where there's going to be a little bit of consolidation anyway. But I'd point out in the eBay chart, here is the outside range at the top here. This hasn't been resolved. There's another one here, hasn't been resolved, but quite a good look in today's close. So I still think there's a little bit to go in the retail stocks. The afterpay credit companies, the buy now, pay later type credit companies, I'd be a little cautious of those. They have had a great run, but I'd certainly still be focused on the Amazons of the world.
Yes, which we could always be focused on the Amazons of the world. Wonderful.
Yeah.
Gary, tell the good people in YouTube land that are watching right now how to get a hold of you if they have further questions.
Okay. I've got a website now. They say that when you're sitting in isolation, you should at least come out with a new skill or a side gig. So I've put in a website called Asta Trading, astatrading.com. You'll find all of my contact information on there. And of course, my local email, if you're that way inclined, always happy to reply to emails, is burton.g, burton.g @telstra, TELSTRA.com. I'm always happy to reply. Don't write me a book, but always happy to reply to questions around trading and analysis, of course, so at any time.
Wonderful. Gary, thank you so much for your time and getting up that early and talking.
It's okay.
Talking the market with us. You're a brave soul. Yeah. One day I'm sure you'll tell me no to one of these, but until then, we enjoy your company.
Thank you so much. Thank you, everyone.
Everyone in the audience, thank you so much for attending today. Remember that in this type of market, it's incredibly important to have a trading plan. Stick with that trading plan, manage your risk, and know when you're going to get out of your trades. If you have any questions, feel free to reach out to us. If you want to contact Gary, his information is in the chat right now. And stay safe out there. And as always, happy trading. See you all.
Thank you.